Welcome back. You're tuning into Market Fatafat. Before we begin with the rest of the stocks that are buzzing away in trade, we have a management on the show of the new kid on the block that is going to hit the D Street very soon on the 12th of March, opening up a subscription, is Popular Vehicles and Services IPO. And we are joined by the management today, Mr. Naveen Philip, who's the managing director, and John Burgess, who's the chief financial officer for the company. Gentlemen, welcome to ET Now. Gentlemen, tell us. So tell us, your IPO is coming to the D Street, and as I can see, the fresh issue is for 250 crores and the offer for sale is for 351 crores. So out of the fresh issue of 250 crores, you're also going to service a debt. That's one of your objectives, as you mentioned in your RHP, that you will be repaying your debt. So how much of the debt will be repaid, and what will be the interest cost saving post the debt repayment?
Yeah, so typically the debt that we carry in our books for the vehicle funding that we do. As you know, for a dealership, the vehicles that we do put in stock for about 25-30 days. And that's primarily the debt that we have in our books is primarily the inventory funding debt. So as you correctly said, about 192 crores or 250 crores will go in repayment of the debts. So really, that will be a crores of interest cost you'll be saving in the bargain.
All right, Mr. Philip, I'll come to you now. For your expansion, you've been using both organic as well as inorganic strategies. So going forward after the IPO, what expansion plans do you have? What are your store additions plans? Could you throw some light on that as well?
Yeah, we can't give a futuristic thing, but we are right now present in 4 states: Kerala, Karnataka, Tamil Nadu, and Maharashtra. And we plan to in these states and also grow further, depending on the geographies and the market size that we see in each geography, and mainly in the passenger vehicle segment.
Mr. Varghese, coming to you then, take us through the demand trends and the demand momentum for the retail on ground.
So demand for both passenger vehicles and commercial vehicles is more or less robust. It goes through these various cycles every year. But we are focused on large service in vehicles, and that is what we continue to grow.
All right, Mr. Philip, help me understand what is the mix of PV to CV to EV in your business right now, and going forward after the IPO, can we expect any change in this mix? What is the mix going to look like?
So approximately 55-56% is PV, and about 35% is, and the remaining is in terms of Ather and Piaggio, and we have a spare parts distribution, which is another about 8 to 10%.
Right, coming to you, Mr. Varghese, how much contribution does your service, repair, and maintenance form, and what is the margin-wise? What's the differential?
What we are focusing on, and that is the interests are the bottom line we get from service part of the pie of our business. Nearly about 55% or more of the EBITDA of the group comes from the service. Even though service contribution only about 15% of the top line, but when it comes to the bottom line, more than 55% of the EBITDA comes from service, and that's where our focus has been and continue will be.
All right, Mr. Philip, I'm going to come to you with my last question that I have for you, and rather impressive numbers coming in when we look at your financial performance. Your revenue has increased by 40.4%, profitability, PAT has gone up by 90.3% between FY22 and 23. So are these kind of growth rates sustainable going ahead? Can we expect the same kind of trajectory to continue?
No. So as far as the revenue is concerned, obviously, as far as the vehicle sale is concerned, I should inform my crystal report that the next decade we will assume a 6 to 8% CAGR for vehicle sales. And on top of that, of course, we'll be having an inorganic and organic growth on top of that. Plus, there is a in the vehicle, as you know, whether in terms of SUV or whether the Arena going to Nexa. So all these revenues. But as I said, more importantly, the service part of it is where we are focusing on, and that is where we'll be continue to grow in the service part. So just to give you a feel of the figures, if you want to compare FY19 with FY23, why I take FY19 is because that's before the COVID period. So between FY19 and last FY23, well, top line, we grew by about 6% as a company. But in service alone, we grew by 15%. This is the CAGR. Talking about the CAGR of FY20 to FY23. And when you go to the EBITDA levels, company grew 15% as a company, as a group. But when you look at service alone, we grew by 25%. Service, which was contributing nearly about 11% of our total revenue in FY19, grew to nearly about 15% in FY23. So just to give you a fair idea of what we are focusing on, how we will look at as we move forward.
All right, gentlemen, Mr. Philip, Mr. Varghese, thanks so much for taking the time out today and joining us this afternoon. That's the management of Popular Vehicles and Services, that IPO to be hitting these streets soon. But with that, viewers, let's continue our frenzy of all the stocks that have been buzzing today. And let me take you through the next stock that's been a buzzer in today's trading session. That is Make Money Organics, because Make Money Crop Nutrition Limited, which is a wholly owned subsidiary of the company, has inaugurated its nano urea plant today at Sanand, which is in Ahmedabad. And the commencement of the commercial production for this nano urea fertilizer will be announced separately in due course. That's the word that is coming in from the company. They have said this in an exchange filing. So on the back of this new unit that has been incorporated, the stock is doing pretty well in trade today at 92.8. That's where the stock is, and 3.3% uptick coming in for the stock as we speak.
Well, another stock in focus today is Zomato. Now, Zomato, post the market hours and financial group, sold 2% stake in the online food delivery aggregator, through an open market for approximately 2,800 crore rupees. Now, the And Group entity of And Financial Singapore Holdings (PTE) sold more than 1 crore 76 lakhs shares of Zomato at an average price of 160 rupees per share, and as of December end, And Financial Singapore Holdings held a 6.32% stake, in the company now through a separate deal. Also, Morgan Stanley Asia Singapore Private Limited bought 56 lakh shares of Zomato for 160 rupees per share. So the block of these two block deals, Zomato is in focus today, but currently it is up 0.9%. It currently trading with gains of 0.9% right now.
All right, that's 5.6 crore shares coming in from Morgan Stanley Asia. But with that, let's bring in our new guest on the technicals today, and that is Shivangi Sarda. And she is joining us today, and she is from MOFSL. So Shivangi, hi, thanks for taking the time out today and joining us. You also have Zomato on your list today on the back of technicals. So tell us, what are the levels you are spotting for Zomato?
Thank you for having me on the show. And we have seen that, Zomato has been in a consistent up move from the last, round about 11 months now, and consistently making higher lows. That is, supports are gradually shifting higher. Very strong counter, and the entire, this consumption space is now picking up momentum with the tailwind. Of course, this stock is going to move even higher. We are looking for the next levels to be around 170 odd levels. 160 would be a crucial level to watch out for. One interesting fact about the stock is that it has been respecting its 50 daily exponential moving average from the last 1 year, which is acting as a crucial support. So definitely right now, after a bit of a cool off of the last 2 days, the risk reward is quite favorable for this stock.
All right, moving on, coming to you, Shesha. Macrotech Developers, I believe this stock is in focus on the back of a fundraise. Take us through the details of that.
Yes, you're right. It is in focus on the back of companies' fundraising plans. The stock has cooled off from day's highs, nearly flat as we speak. So the company informed the exchanges that they've raised funds to the tune of about 3,280 crores at an issue price of 1,098 rupees per share, which is at a discount of about 2.8% to the floor price that was fixed by the company of about 1,129 rupees per share. Interestingly, GQG Partners is one of the allottees in this fundraise, which was done via QIP. We have HDFC Life Insurance, Nomura Funds, Invesco Developing Markets Funds are some of the other allottees in this fundraise. GQG Partners, in fact, invested nearly 11.2% of the total issue size, which translates to about an investment of 367 crores in the company. So on account of these news flow and the fact that prominent investors have now started entering the company, the stock is in focus. Flat as we speak, but a big news flow that has come in.
All right, well, let's shift back to the technicals. And Swati, you've picked out Kalyan Jewellers for us, and what a magnificent run-up this stock has seen in the last 52 weeks or in the last 6 months as well. It's almost tripled, like 3.5 times in the last 52 weeks. So are you spotting any more run-up over here, or what's your view coming in for this stock?
So for Kalyan Jewellers, we've seen that this stock is one such stock which has consistently performed on a year-on-year basis, and we've seen that there has been a lot of focus on this stock right now, because we are seeing that the women are directly or indirectly responsible for 70 to 80% of the consumption decisions, and the changing lifestyles and participation of women in the workforce has played a very important role in the theme of the stock. So technically, if we talk about the stock, the RSI is giving a positive divergence over here. It's surpassed its previous hurdle of 390 odd levels, which is now acting as a crucial support. So definitely the stock is coming out of its consolidative band on the daily frame, and month-on-month basis, we've seen that the stock has outperformed in the last 10 months. So the entire year has been a quite favorable for the stock, and we are looking at the targets to extend to 425 odd levels, and 400 would be a crucial support to watch out.
Right, with that, it's time for us to slip into a short break. But before that, let me quickly mark a flash that's coming in. That Tata Motors is going to increase the prices of commercial vehicles by 2%, and that is going to start from the 1st of April. If you can pull up the charts of Tata Motors right now and see where the stock is at. Tata Motors has been in news on the back of its demerger that has come in, and that stock has been in focus. In fact, yesterday also it was one of the top Nifty gainers. It is trading with gains of more than almost 2% right now. That's the news coming in on Tata Motors. But viewers, don't go anywhere. We'll be right back.
Hi there, welcome back, and let's take it ahead with all the stocks that have been buzzing. And Gaurav, you've picked out Syrma SGS for us. Tell us, why is the stock a buzz in today's session?
Yes, so if you look at Syrma SGS, it is buzzing because CLSA has now initiated with the buy rating and a target price of 645 rupees for the stock. So what they believe is that the company is a leading player in the EMS segment, and if you also look at the business, it is well diversified. From here on, they see several levers for the growth for the company, and on back of this, we may expect the medium-term growth to remain somewhere with the CAGR of 18%, and over the next 3 years, they are expecting a top-line growth of 38% CAGR. And on back of this, they also believe that from here on, margins and returns are something that we should be watching out for. But if you look at the stock's trajectory and the share price, it was up in the month of January and it reached the 52 weeks high, but after that the stock has shown a sharp fall and it is now trading somewhere in the range of 530 rupees levels. But given that they have given a target price of 645 rupees, that still leaves a healthy upside of 22%, and that is why this stock is definitely worth watching out for, as it may surprise us with the upside in the coming days.
All right, thank you so much for that, Gaurav. We'll move on to another stock that is in focus today. Is Allcargo Logistics. It started out the day with the gains of 0.8%, but as it has cooled off those gains and currently trading towards the day's lowest point, it is currently quite flat right now. But it is on the back of its February 2024 operational updates. Now, let's look at the volume growth. The total volume, including the surface and air express, stood at around 104 KT, which is up 15% on a year-on-year basis, but on a sequential basis, it is up 13%. Now, the company says that the volumes continue to remain buoyant on the back of the sales acceleration initiatives, coupled with the improved service parameters, and that's the word coming in on the volume growth for the company. And on the back of that, Allcargo Logistics is in focus today.
All right, well, let's move on to the technicals. And Shivangi, Bharti Airtel has made it to your list. Tell us, what are the upsides, if any, that you're spotting on the stock?
Absolutely, Bharti Airtel is one stock which is looking quite positive in this space. We've recently seen that the stock has come out of its consolidation on the weekly basis, and a surge in the RSI indicator is signifying that the stock is now set to move even higher after a very good support base buying near 1090 odd level. So overall, the stock is looking quite positive, and we are expecting targets over here. Now, one thing which is quite interesting over here is that it is respecting its crucial exponential moving average on the daily frame as well. So overall, the stock is looking for 1250 odd levels with a stop near 1175.
All right, thank you so much for joining us, our research team, Ashesha, Gaurav, Shivangi, thank you so much for joining us today. But with that, viewers, we are at towards the tail end of the show. These are the stocks that are buzzing away in trade. But a quick programming note before we leave you. Over the past few weeks, ET Now and ET Now Swadesh have aired